And today we're looking at the stunning collapse of WeWork. We knew the bankruptcy was coming. We keep getting headline after headline as to how they're going to navigate their office leases as they go through bankruptcy.
What went wrong with WeWork? What was once America's most valuable startup has just filed for bankruptcy.
Bankruptcy, Chapter 11, announcing a restructuring plan that includes a $3 billion debt for equity swap.
How does a once iconic company that promised to revolutionize the way we work go from IPO to bankrupt within 5 years? Welcome back to Corporate Catalysts, where we look at fascinating stories of the world's most recognizable businesses and the people behind them. Brace yourself for an inside look at the rise and fall of one of the most iconic companies in recent history, WeWork. We'll dive into the origins, triumphs, scandals, and ultimate demise of this once untouchable unicorn. WeWork was once a startup with lofty goals of revolutionizing workspaces and building a physical social network. WeWork's appeal went beyond mere office spaces. It embraced trendy designs, community vibes, and added extras like happy hours, creating a lifestyle rather than just a workspace. WeWork wasn't just about walls and desks. It was about creating a community with happy hours and a cool vibe. The story took unexpected turns, involving massive venture capital, bold valuations, and a roller coaster ride in the business world. Let's delve into the rise and fall of WeWork, exploring the twists and lessons along the way. Adam Neumann, an Israeli, and Miguel McKelvey, an American, opened Green Desk in May 2008 as an eco-friendly co-working space in Brooklyn. In 2010, Neumann and McKelvey sold the business and started a company called WeWork. The company rented its first space in Soho, Manhattan, and it opened in April 2011. Later that year, PepsiCo sent a few workers to the space. These employees helped smaller WeWork member companies by giving them advice, turning the space into a startup incubator. By 2013, 350 companies like Photocracy and Hackhands were among WeWork's clients. People thought of WeWork as the fastest growing lessee of new office space in New York by 2014. They were also on track to become the fastest growing lessee of new space in America. As of 2014, JP Morgan Chase, T. Rowe Price, Wellington Management, and Goldman Sachs were among the many companies that had invested in WeWork. Fast Company named WeWork one of its 50 most innovative companies in February 2015. Artie Minson, who used to be Time Warner Cable's CFO, became president and chief operating officer of the company on June 1st, 2015. WeWork's core business model was a game changer in the world of office leasing. At its core, WeWork's business model was like a real estate remix with a dash of flexibility. It took the concept of co-working and turned it into something more than just renting office space. Here's the breakdown. WeWork started by renting large office spaces from commercial landlords. These weren't your run-of-the-mill spaces. They were often in prime locations, making them attractive to businesses looking for a trendy work environment. Once they got hold of these spacious offices, WeWork worked its magic. They divided these large spaces into smaller, more manageable offices. This allowed them to offer flexibility to businesses of all sizes. Flexible renting was a game changer. Instead of the traditional long-term leases that made landlords and tenants commit for years, WeWork introduced shorter, more flexible arrangements. Startups and small businesses loved the idea of having an office without the long-term commitment. But WeWork didn't stop at just walls and desks. They added a sprinkle of trendiness to their spaces, exposed brick, open layouts, and a design that resonated with the younger startup crowd. It wasn't just about work. It was about creating a community where like-minded entrepreneurs could connect. To sweeten the deal, WeWork threw in some extras: regular happy hours, networking events, and a sense of camaraderie. It was more than just a place to work. It was a lifestyle. In essence, WeWork's core business aimed to redefine office spaces, making them more flexible, appealing, and community-oriented. By tapping into the changing needs of the workforce, WeWork created an alternative to traditional, rigid office setups. Now, what set WeWork apart was its access to capital and a valuation strategy that differed from its competitors. While many co-working spaces aimed for profitability, WeWork, under the leadership of Adam Neumann, focused on rapid revenue growth. This approach was made possible through substantial venture capital funding, allowing WeWork to spend generously on prime locations and not just offer office spaces but an entire lifestyle. A pivotal moment in WeWork's journey was Joel Schreiber's $15 million investment in July 2017, which valued the company at $100 million. This unconventional approach taught Newman a crucial lesson: assert the company's value boldly, find an investor willing to agree. Suddenly, the valuation became significant. WeWork's rise was unorthodox and driven by a preference for growth over profits, which appealed to investors. In its early years, WeWork rode the wave of massive venture capital investments, pouring into various businesses, burning cash to acquire customers. With SoftBank's $4.4 billion investment, WeWork's valuation shot up to $20 billion, making it the fourth most valuable startup in the US. This financial backing allowed WeWork to disrupt the market by offering incentives that competitors couldn't match. The unconventional approach of prioritizing growth over profits marked a unique chapter in WeWork's trajectory. WeWork didn't stop at offices. They went for big dreams, trying new things beyond just workplaces. One big idea was We Live, a way to rethink how people live together. They wanted to bring the community vibe from WeWork offices to living spaces, making places where people could collaborate and share experiences. They went even further with WeGrow, jumping into education. WeGrow wasn't just a regular school. It was about unlocking every kid's superpowers. It was a bold move into the education world, showing WeWork's desire to change not only how we work, but also how we live and teach kids. Trying these different things is like a risky game. WeWork wanted to shake up not only offices, but also our homes and schools. SoftBank, the company supporting WeWork, wasn't just saying they liked WeWork's current ideas. They believed We Live and WeGrow could also be successful. It was like a bet that WeWork could make a big difference, not only in offices, but in different parts of our lives. As WeWork tried new things in living spaces and education, people wondered, were they thinking big or going too far? This change added more twist to WeWork's story. When SoftBank supported WeWork, it wasn't just because they liked what WeWork was already doing. They believed We Live and WeGrow could also do well. SoftBank teaming up with WeWork was a mix of big dreams and big money. It wasn't just about changing offices. It was a bet that WeWork could shake up other areas of our lives. The extra money didn't just help WeWork's offices grow. It also let them explore new areas like homes and schools. However, this growth also came with its own challenges. In January 2018, 2 U students taking online college classes were able to use the common areas and meeting rooms at WeWork. It was at the University of Maryland College Park in December 2018 that WeWork opened its first shop on a college campus. WeWork and Roan Group, a private equity company, raised more than $400 million in March 2018 to start a fund that would buy properties directly. WeWork also bought Conductor in March 2018. CEOs of Conductor bought the business back from WeWork in December 2019. WeWork paid $400 million to buy the Chinese sharing company Naked Hub in April 2018. WeWork bought Mission U, a company that calls itself an alternative to college, for $4 million in stock in May 2018. Soon after, Mission U shut down. Students were not charged fees. Investors got their money back from Mission U. WeWork raised $500 million in July 2018 to grow its business in China, which made its Chinese branch worth $5 billion. WeWork's Flatiron School bought Designation, a for-profit design school, in August 2018. Team is office management software that WeWork bought for $100 million in September 2018. Later that year, iOffice bought it. SoftBank bought the right to buy up to $3 billion worth of shares in the company by the end of September 2019 at a price of $42 billion in November 2018. However, WeWork also lost $2 billion that year, a sign of things to come. In January 2019, WeWork raised an additional $2 billion from SoftBank, valuing the company at $47 billion. As part of its plan to grow in Tampa, Florida, WeWork announced that it would open a site on 2 floors of a building in Tampa Heights in 2020. Managed by Q is a tool that office renters can use to hire service providers. WeWork bought it in April 2019. After losing money, it was sold in March 2020. A draft statement for a planned initial public offering was filed by WeWork on April 29, 2019. It was around this time that CEO Adam Neumann sold $700 million worth of WeWork stock, completing his sale in July 2019. The organization sent in Form S-1 on August 14, 2019. The paperwork showed big losses, pricey lease deals, and a tense relationship with the company's founder, Adam Neumann. In addition, it showed that the company had $47 billion in future lease obligations, but only $4 billion in future lease commitments. This revelation sparked concerns with investors about WeWork's ability to generate profits. The WeWork experience showed that thinking big comes with risks and rewards. The WeWork legacy isn't just about offices. It highlights the challenges of how hard it is to grow, handle money, and stay strong in tough times. WeWork had a tough time with money despite its unique way of doing business and getting lots of investment. At first, things seemed good because of its global hypergrowth, but there was a big issue. They weren't making enough money. On September 20th, 2019, CNN published an article in which Boston Federal Reserve Bank President Eric Rosengren cautioned about the risk that companies like WeWork pose to the U.S. economy due to the model of signing long-term leases with the landlord and then releasing the spaces to smaller, less established companies that would be vulnerable to an economic downturn. In the article, he is quoted as mentioning, "In a downturn, the co-working company would be exposed to the loss of tenant income, which puts both them and the property owner at risk if they cannot make lease payments to the owner of the building. I am concerned that commercial real estate losses will be larger in the next downturn because of this growing feature of the real estate market, which could ultimately make runs and vacancies more likely due to this new leasing model." WeWork's financial documents were closely studied. Big mistakes were found that made investors and experts nervous. The company's past records showed that it consistently lost a lot of money compared to what it made, which made people question its ability to become profitable in the long term. Also, there were questions about how the leases for WeWork were valued, and whether they truly showed how much the company's assets were worth. WeWork officially withdrew its S1 IPO filing on September 17, 2019, because investors were getting more worried about the company's leadership, value, and future. The company also said that its IPO would be delayed until late 2019. At that time, the company was said to be worth about $10 billion to the market. This was less than the $47 billion it was worth in January, and less than the $12.8 billion it had raised since 2010. SoftBank wanted Newman to be fired as CEO by September 23, 2019. The next day, investors put more and more pressure on company co-founder Adam Neumann, who quit as CEO and gave up control of the majority vote in WeWork. Artie Minson and Sebastian Gunningham were named co-CEOs of the company. WeWork stated on February 1, 2020, that Sandeep Mathrani, who had been a senior executive at GGP Inc. and Brookfield Property Partners, would take over as CEO of the company on February 18, 2020. This latest change in CEO came less than 6 months after the last appointment. McKelvey notified WeWork on June 5, 2020, that he would be leaving at the end of the month. Due to the COVID pandemic, WeWork closed 100 locations in China. The company also moved out of 66 global sites in 2020, renegotiated leases at more than 150 others to get lower rent, deferrals, or other conditions. Following the down year of 2020, 2021 was a highlight-worthy year, as the company agreed in March 2021 to join with WeWork's Acquisition Corp. and go public through a special purpose acquisition company worth $9 billion. Following the merger, Mathrani would still be CEO, but Vivek Ranadive from WeWork's and Devin Parekh from Insight Partners would become board members. The deal was finalized in October 2021, and WeWork stock started trading on the New York Stock Exchange. It was also announced in August 2021 that WeWork was one of 5 co-working spaces chosen by the General Services Administration to work with the U.S. federal government. However, this would be the end of WeWork's good run, as its financial troubles would reach their climax in 2023. WeWork was in danger of being taken off the New York Stock Exchange in April 2023 because its stock price had dropped below $1. It was worth $360.9 million, less than the $47 billion it was worth in 2019. The company had over 700 sites in 39 countries around the world by the end of June 2023. At that time, WeWork paid over $2.7 billion a year in rent and interest, which was more than 80% of its income. On August 8, 2023, WeWork said it has substantial doubt that it can continue to operate and informed everyone that it might need to file for Chapter 11 bankruptcy. WeWork said that it would try to keep its costs down and lower its rent and tenancy costs by renegotiating and restructuring its leases with owners. The business also said it would try to keep the people who are currently using its workspaces and raise money by selling some of its assets. Over the course of April to June 2023, the The business lost a total of $397 million. This was $238 million less than at the same time in 2022. WeWork borrowed money from a group of investment management companies on August 24, 2023. They said they were looking into ways to save the company, such as a possible Chapter 11 bankruptcy reorganization. There were 3 businesses in the group: BlackRock, King Street Capital Management, and Brigade Capital. After the news came out, WeWork's stock went up about 12%, trading at 13 cents in the afternoon. In October 2023, the New York Times published an article that indicated that WeWork would be skipping $95 million in interest payments. Missing these payments was intended to jumpstart a 30-day grace period and negotiations with its lenders, as the company insisted that it had cash on hand. WeWork's interim chief executive, David Tolley, was quoted as saying, "I believe our lenders will absolutely understand our decision to enter into the grace period." However, on October 31, 2023, WeWork stated that it was getting ready to file for Chapter 11 bankruptcy as soon as the following week, because its grace period with creditors was set to end on November 6, 2023. As a result, WeWork's stock fell another 37%, and on November 6, 2023, WeWork's fate was sealed, as it filed a petition under Chapter 11 of the U.S. Bankruptcy Code, stating debts of between $10 billion and $50 billion. WeWork's stock trading was halted and immediately delisted from the New York Stock Exchange, although most of its offices will remain open during the bankruptcy process. The Financial Times says that by the time WeWork filed for bankruptcy, SoftBank had invested or pledged more than $16 billion. This included a payment of $1.5 billion to Goldman Sachs and other creditors just days before filing, as SoftBank had backed WeWork's loans. WeWork's era as a publicly traded company spanned just under 2 years. Since going public, it's been a wild, wild ride. Imagine a roller coaster that goes up, 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 and then suddenly takes a nosedive. Well, that's pretty much what happened to WeWork's stock. The numbers are jaw-dropping. WeWork's stock fell by almost 99.5% before getting delisted. Yes, you heard that right. 99.5%. It's like watching a magic trick. But instead of the magician making something disappear, it's the stock value. So let's break it down. When WeWork first went public through a SPAC merger, it was riding high. People were excited, investors were hopeful, and the stock was doing its little happy dance. Then, reality hit, like a ton of bricks. It's like being on that roller coaster, and just when you think the drops are over, there's another surprise drop waiting for you. Investors who once saw promise and potential saw their investments evaporate. And that's the end of the WeWork story, a mix of good and tough times. From dreaming big about changing workspaces to facing money problems, WeWork has had its share of ups and downs. The WeWork story is not just about offices, but also about how tricky it can be to grow and manage money. It shows that in the business world, you need big ideas, but also a smart plan to make them work. The rise and fall of WeWork can be attributed to a combination of factors, including financial irregularities, leadership and governance issues, and ultimately a failure to live up to the hype. The company's rapid expansion and aggressive valuation were met with scrutiny and skepticism, leading to its downfall. The WeWork saga serves as a cautionary tale for both investors and entrepreneurs, highlighting the importance of transparency, accountability, and sustainable growth. It also raises questions about the future of the co-working industry and the viability of the unicorn startup model. As the dust settles, there is no doubt that more lessons will be learned from this controversial chapter in business history. If you liked hearing about WeWork, don't forget to like, share, and subscribe to Corporate Catalysts for more riveting tales from the world of finance, technology, and beyond. We'll see you on our next episode.